What if debt was never meant to be repaid? What if the promise of borrow now, build later was never the real objective? Here's the mystery. Across thousands of years, from ancient empires to modern superpowers, debt keeps reappearing not as a temporary tool but as a permanent condition. Individuals work their entire lives to pay it off. Nations restructure it again and again. Crises come and go, yet debt only grows. If debt is supposed to be about money, why does it so consistently end in obedience, austerity, and loss of choice? Tonight, we're not just talking about interest rates or budgets. We're uncovering a deeper pattern, one that suggests debt was always about control. The evidence stretches from clay tablets to digital ledgers. Setting the stage, debt before money. To understand the real function of debt, we have to start before coins, banks, or capitalism. Long before money existed, debt already did. In ancient Mesopotamia, over 4,000 years ago, records carved into clay tablets detailed debts owed in grain or silver units that didn't physically exist yet. Farmers borrowed seeds from temples. When floods failed or harvests collapsed, they couldn't repay. The result wasn't bankruptcy, it was bondage. Families were forced into servitude. Land was seized. Power consolidated upward. Kings eventually noticed something dangerous. Too much debt destabilized society, so they declared periodic debt jubilees, wiping the slate clean to prevent rebellion. That tells us something crucial. Debt wasn't just economic, it was political. It could break a society if pushed too far. Already, the pattern was clear. Debt created hierarchy. Creditors gained leverage. Debtors lost autonomy. Money came later. Control came first. Origins. Debt as a tool of power. Fast forward to ancient Rome. Rome didn't collapse because it lacked wealth. It collapsed because debt hollowed out its middle class. Small landowners borrowed to survive wars and taxes. When they defaulted, elites bought their land cheaply. Farmers became tenants. Citizens became dependent. Political loyalty shifted toward those who controlled credit, not those who produced value. Debt turned citizens into subjects. Centuries later, the same logic appeared in colonial systems. European empires didn't just conquer land with armies, they used loans. Colonies were forced to borrow for infrastructure that primarily benefited their rulers. Railways moved raw materials out. Interest flowed back to the empire. The time independence came, the debt remained. This wasn't accidental, it was structural. Debt ensured that even after flags changed, power didn't. The rise, banking, interest, and institutional control. Now we enter the modern era. In the 17th and 18th centuries, national banks emerged. Governments discovered something revolutionary. They could fund wars and expansion, not through taxes alone, but by borrowing from private financiers. This changed everything. Public debt transformed states into permanent borrowers. Interest payments became non-negotiable. Budgets bent around creditors. Wars could be fought without immediate public backlash till the bill came due. Over time, debt stopped being a temporary emergency tool and became the default operating system. Then came central banking. Money itself was increasingly created through lending. When a loan is issued, new money enters the system, but the interest does not. This means, mathematically, someone must always fall behind. Debt wasn't a side effect anymore. It was the engine. The system required perpetual borrowing to survive. Growth wasn't optional, it was mandatory. When growth slowed, control tightened. The breaking point. Crisis reveals the truth. Every debt system eventually reaches a breaking point. In 1929, it was the Great Depression. Over-leveraged economies collapsed. People lost jobs, homes, dignity. Governments intervened not to erase debt, but to stabilize banks. In 1980s Latin America, countries borrowed heavily during periods of cheap credit. When interest rates spiked, they couldn't pay. The result? Decades of austerity. Public services slashed, wages frozen, sovereignty compromised. In 2008, the world watched a financial crisis triggered by reckless lending. Banks failed. But here's the twist. The debt didn't disappear, it was transferred. Private losses became public obligations. Taxpayers didn't vote for this, they inherited it. And once again, the question resurfaced. If debt is about responsibility, why are those least responsible always the ones forced to pay? Fallout, austerity, obedience. Lost choice. After every crisis comes the same prescription: austerity. Cut spending, reduce pensions, privatize assets, open markets, raise taxes on consumption, not wealth. These policies are often presented as unavoidable technical necessities. But their effects are deeply political. They reshape societies. They discipline populations. Countries under heavy debt don't get to choose freely. Policy decisions are filtered through creditor approval. Democracy exists, but with conditions. Debt becomes a leash. Even at the personal level, the same pattern plays out. Student debt delays family formation. Medical debt forces job lock-in. Mortgage debt dictates geography and risk tolerance. People don't rebel when they're indebted. They comply. Control doesn't require force when obligation is internalized. Failed fixes. Why reforms never go far enough over the years? Many solutions have been proposed. Debt restructuring, bailouts, stimulus packages, financial reforms. Yet the core design never changes. Why? Because the system doesn't malfunction, it performs exactly as intended. Debt relief is offered only when collapse threatens the whole structure, not when suffering becomes widespread. Interest rates are adjusted, but the principle of perpetual obligation remains. Even forgiveness often comes with conditions that deepen dependence. The fix is never to question why debt must grow faster than real productivity. The fix is always to make debt more manageable, never optional. Modern parallels. The pattern repeats today. Global debt has surpassed levels never seen before. Governments carry obligations so large they can only be rolled over, not repaid. Households rely on credit for survival. Entire generations begin adult life already in the red. Technology has refined control. Digital payments track behavior. Credit scores determine opportunity. Algorithms decide risk. Access to housing, healthcare, and education is filtered through debtworthiness. The system doesn't ask who you are, it asks what you owe. What's shocking isn't just the scale, it's the consistency. Different eras, different technologies, same outcome. Debt concentrates power upward and restricts freedom downward. That's not coincidence. That's design. The delayed answer: so what was debt really for? Debt was never primarily about money. Money is just the language. Debt is about obligation, leverage, and predictability. It turns uncertain human behavior into measurable compliance. It ensures future labor. It limits resistance. It stabilizes hierarchy. A person with no debt can walk away. A nation with no debt can say no. That's the real threat. 3 clear takeaways. First, debt is not neutral. It always creates a power relationship. The question is never just how much, but who controls whom. Second, crises don't break the debt system, they reinforce it. Each collapse transfers more control upward under the justification of stability. Third, financial literacy alone isn't enough. Understanding debt requires understanding history, incentives, and power structures. A warning and an open question: we're entering an era where debt is invisible, automated, and normalized from birth. When obligation becomes background noise, control becomes effortless. So here's the question to sit with. What happens to freedom in a world where everyone owes something and someone else decides the terms? Call to action. If this perspective challenged what you thought you knew about debt, don't let it stop here. Question the stories you're told about money. Look at who benefits, not just what's promised. Share this video with someone who still believes debt is just a personal responsibility and nothing more. Because once you see debt for what it really is, you can't unsee it. And that awareness is the first step toward real choice.